Hey, there's a bubble.
How do you know?
Trust me.
So SpaceX IPOs, and in a couple of trading days, they surpassed the market cap of Amazon, a company who last year alone did $77 billion of profit, while SpaceX just did $5 billion. Just kidding, they lost $5 billion last year. While the whole world was staring at this rocket go up, the same week, gold had its worst performance in years. It dropped 12% in the same week. And Wall Street was screaming, hey guys, the gold bull market is completely over. Sell now. And a lot of people did. But at the same time, central banks in the first quarter of this year, when gold was a little bit higher than it is now, they were buying gold by the ton loads. They literally bought 244 tons in the first part of this year, in the first quarter. So if you listen to Wall Street and AI is the future and gold is some dead relic, then why are the people who run the monetary system, why are they trusting in this 5,000-year-old rock? Today, I want to show you exactly how this game is rigged against you and why all that money being flooded into the AI bubble is the exact same reason why central banks are buying more gold. My name is Ivan Hidalgo. I don't bet on bubbles, I hedge against them. This is the Golden Bear, where we stack hard money and watch the empire fall. When you hear investors are selling gold, yes, some of retail sold gold, but this is not what I'm talking about. I'm talking about the real heavy capital, the institutions. And right now, they're divided in two different groups, and they're playing completely opposite games. The first is loud money. This is classic Wall Street. This is hedge funds, pension funds, passive ETFs, momentum traders, the talking heads on TV. Yes, those guys, they sold gold in the past few months, especially in the last month. But their conviction is zero. If the narrative changes just slightly, then they're out. They flee. And the narrative did shift pretty quick. On June 5th, the jobs report came out, and it was pretty much double of what Wall Street was expecting. Then inflation came out, and the print said 4.2%. So the rate cuts that everyone was expecting now turn into rate hikes. Since gold doesn't pay a yield, that's the first thing that fast money fled. It got out of gold. Now the quiet money. I'm talking about central banks, the sovereign wealth funds, the type of money that can move on a geopolitical timeline. They aren't reading the research notes. They're literally moving the reserves that then banks like Goldman Sachs and JP Morgan, they go out and sell research reports on. And while those research reports are telling you to sell and buy AI, the quiet money is buying gold with both hands. To understand why, let's stop watching the traders and start watching the machine. There's an old idea in economics called the Cantillon effect, which basically means the closer you are to the money supply, the money printer, the more likely you're going to win in this financial game. Because you can get the new printed money before prices go up, and you can buy things when prices are still down, before they're infected by inflation. And you watching this, you're at the very end of that line. So other than the central banks themselves, who's at the front of the line? Well, I can tell you one name, BlackRock. They are the biggest money managers on earth. A couple of things that you might not know about them is that in 2008, the Federal Reserve literally hired them to fix the economy. They were the ones in charge of the cleanup. And then in 2020, they were also the same guys in charge of the cleanup. They run a piece of software called Aladdin, which literally has $22 trillion of the world money running through it. And they own iShares, the largest ETF empire in the world. They're the ones that are selling you slices of this AI boom. So sit with what that means. The same company that's sitting right next to the money printer are the same people who are packaging up assets and selling that back to you. And nobody's really even hiding this. That's just how the business works. So we've got two groups of people. The fast money selling gold, while the quiet money is buying more gold than ever. And I want to talk to you exactly why this happened, because it's the most important part of the story. In 2022, Russia invades Ukraine. And in a matter of days, the US and Europe turn off Russia's financial system internationally. What that means is that Russia lost $300 billion worth of treasury bonds or anything they have in savings account or checkings account, just gone. But there's one thing that they couldn't touch, which was Russia's gold, which was sitting in a basement in Moscow. So around the world, central bankers saw this and pretty much all at the same time said, well, if they can do that to Russia, they can do that to us. So they started buying gold hand over fist, and you can see it in this chart. Since 2022, central bank gold accumulation is dramatically increasing. There's a woman named Catherine Austin Fitts. She was a top US government official, and she has an amazing line that I love. She says, there's an official reality, and then there's the reality.
You say there's an official reality, and then there's reality.
And the official reality was that US Treasury bonds is the safest financial instrument in the world. And the reality is that they can be frozen at any second. So this started the buying spree, and last year, central banks bought 850 tons of gold, and there was a lot more that was undocumented. Poland's central bank governor flat out said the reason why they're buying more gold is because it holds its value even if you're shut out of the financial system. But while central banks are buying more gold than ever, trying to secure their future, anyone who talks about gold from the central banks has a very different face. Now, watch this clip and you'll understand.
Do you think gold is money?
No.
It's not money.
It's
Even if it had
precious
been money
metal.
for 6,000 years, somebody reversed that and eliminated that economic law.
Well, it's an asset. I mean, it's the same. Would you say treasury bills are money? I don't think they're money either, but they're a financial
why do
asset.
central banks hold it?
Well, it's a
not
form of
money.
reserves. It's a
Why
form
don't
of-
they hold diamonds?
Well, it's tradition.
That was Ben Bernanke, the chairman of the Federal Reserve, literally caught in this clip live saying that gold is just a tradition and it's not money. Yet the US holds 8,000 tons of this stuff, a lot of it in Fort Knox, and they still have it at $42 an ounce since the 1970s. I'll let you come up with your own conclusions on this. And they're not the only ones doing it either. Look at the guys who are trying to create the future of money. Tether, right here in El Salvador. Last year alone, they bought over 100 tons of gold. They're selling you the digital railway, USDT, while they're secretly buying more gold than most central banks, while most central banks are buying more than any other time in history. The people building the next digital dollar are hedging it with a rock. So they're essentially saying, you keep the app and we'll keep the gold. So that's who's buying and why. But it still leaves the question, why gold? Why this shiny rock and not literally anything else? Well, gold isn't going up. Gold has never gone up. Gold is the ruler. It's the thing that you measure everything else against. And what's been happening your entire life is that the dollar's value has been shrinking against it. The government's own inflation calculator will tell you that $1.1971 is worth 12 cents today. Now that's the government's number, the friendly one. But if you measure it from the same time scale, you measure it against gold, then the dollar's lost 99% of its value. Gold has gone up from $35 to about $4,300 an ounce. That's a 99% destruction of the dollar's value. And gold didn't do anything. It just sat there being gold. That's all it has to do. Okay, now the AI side. And you might be thinking, okay, but AI is actually going to be useful for our economy. And yes, I agree. It's not tulips. This is real. There's going to be real value created from this. I'm telling you that if you go back far enough in history, we've seen the same movie before, like the exact same. Paris 1720. A guy named John Law, who is essentially running France's money, he does two things at the same time. He prints more money and he offers an IPO. There was no IPOs back then, but he publicly offers shares in his new company called the Mississippi Company. Had an amazing story behind it. Brand new world, new wealth. Everything's going to come from this brand new place called Mississippi. And the shares went from $500 to $10,000 in a matter of months. People got so rich that the word millionaire was literally invented on the same streets where they traded it. And then in under a year, the shares and the paper money underneath it basically collapsed. Now, the moral of the story here is that the people that invested, they were probably right. There definitely was a future of the Mississippi Company, but they were just wrong about the thing that it was priced in. That is the problem. The money was being printed into oblivion. And if you think this time is different, here's a chart that I want to show you. Take the S&P 500, the greatest bull market in American history, and instead of pricing it in dollars, let's price it in gold. And if you price it in gold, then you actually understand the true meaning behind what's been happening, not just recently with SpaceX, but with all this bubbly behavior in the markets. Is that it's never truly about the thriving economy and the strong 500 companies. It's really about the ruler being debased and what they're measuring the S&P 500 in. You've been told your whole life that things just go up in price. Houses go up, watches go up, stocks go up. But if you price these things in gold, almost all of them have been coming down, which makes sense. It's deflationary. We are actually in a deflationary environment if you price it in gold. In 1971, the average price of a house was $25,000. Today, it's worth $450,000 in America. Price in gold. Back then in 1971, a house cost 600 ounces of gold. Today, just 100. If you learned something today, I'd really appreciate it if you hit the subscribe button. Thanks so much. So here's what I've actually done in my investment portfolio. Now, classic disclaimer, this is just for me, not for you. 80% of my money is in physical gold, stored in various different places. And this month, when gold dropped 12%, it dropped 12% in dollars, but that's not what I'm measuring it in. I'm measuring my wealth in ounces, not in dollars. So to tie everything together, gold didn't do anything over the past 4 months. It didn't drop 12%, like they said, just sat there while everything else moved around it. The dollar got a new manager, the rate cuts that people were expecting disappeared, the fast money printed into AI trades, and the people who print the world's money continue to buy the one thing that they couldn't print. They were selling you AI while they were buying gold. Until the people who keep printing money stop printing so much, and until they stop buying so much gold, I'm not going to listen to what they say, and I'm just going to copy what they do. This is the Golden Bear. Please like and subscribe, and I'll see you in the next one.